Silver prices have swung wildly in recent weeks, with spot silver dropping to nearly $74 an ounce after hitting a peak of about $90 in May. That's a 17% correction in just a few days. The decline came after a strong run that pushed silver through old resistance levels in April and early May. Investors had been buying silver as a safe haven amid concerns about factory supply shortages and macroeconomic uncertainty. But the drop accelerated when three factors aligned: higher U.S. inflation data, rising Treasury yields, and weaker industrial demand forecasts. Now, traders are watching how silver behaves between $75 and $77 as it attempts to stabilize. The bigger picture remains intact, with a long-term technical pattern suggesting silver could still rise toward $196 per ounce. Analysts like Northstar Charts have been highlighting a massive 46-year-old cup and handle formation that stretches back to the 1980s. In technical analysis, a cup and handle pattern typically precedes a major upward move after a consolidation phase. The cup represents a long period of accumulation, while the handle is a smaller correction before the next leg of the trend. In this case, the correction from $90 to $74 fits neatly within. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The expected setup. The chart suggests that the drop was not a breakdown, but rather a necessary part of the pattern. The Fibonacci extension levels on the chart project a potential move toward $196 if the pattern completes itself. Importantly, the correction was always expected in this setup. When silver was near $49, analysts were already projecting a doubling of prices before a pullback would occur. That idea has now aligned with the recent price action, where silver reached $90 before falling sharply in May. The chart itself is a long-term view, and while the recent correction is significant, it's not seen as a failure of the pattern. Traders are now watching whether silver can hold above $75 and begin another upward move. If the pattern holds, the next target would be a breakout above the handle's resistance, which could trigger renewed buying interest and push the price toward the $196 level. The key signal to watch is a sustained move above $77, which would suggest the pattern is still intact and that the next phase of the trend could begin. If silver breaks below $74, that could signal a breakdown of the setup and potentially shift the outlook. But as long as it stays above $75, the long-term bullish case remains in place. The current stabilization phase is critical for confirming whether the pattern will continue or if silver will face another wave of selling pressure. Investors are also keeping an eye on macroeconomic factors like inflation and interest rates, which could influence the metal's performance. The next major signal will be whether silver can hold above $77 and show signs of a new upward trend. If it does, the path to $196 becomes more credible. If not, traders may need to reassess the pattern and look. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For alternative setups, the stakes are clear. If the pattern plays out as expected, silver could see a dramatic increase in value, potentially tripling from its recent low. But if the pattern fails, it could signal a shift in market sentiment and a longer period of consolidation or even decline. For now, the market is in a holding pattern, waiting for a clear breakout or breakdown to confirm the next direction. The cup and handle remains a key focus for traders and investors, offering a potential roadmap for where silver could be headed in the months and years to come.